There are lots of signs the broad equity market is peaking. We're going to take a look. Stay tuned. Welcome to Sunday Night Charts. We take a look at the charts to help you with the trading week ahead. I'm your host, Steven Van Metre, and welcome. The moving average of colors on your screen, 21 day is red, 50 day is green, 100 day is blue, 200 day is tan. Price versus momentum. Price is a general direction. Prices are heading. Momentum is a rate of change, a bullish indicator for both is positive and a bearish indicator for both is negative. Momentum often, but not always, leads price. Technical analysis attempts to determine where buyers and sellers are at. Resistance is a level buyers can't break, and support is a level sellers can't break, or resistance is where sellers are at and support is where buyers are at. Technical analysis does not predict prices. It can be used to determine the risk of a trade, help with time of trade, and provide the direction to the path of least resistance. Charting offers possibilities, not probabilities, and not certainties. Let's start out with the S&P 500. Now, price and momentum across the three major moving averages that I like, 21-day, 50-day, and 100-day, virtually unchanged, except 100-day now flipping bearish on momentum. You know, when you see momentum, which often, but not always, leads price go bearish, that should be an indicator to where the price is headed. We've now seen it dip below its 9-day moving average. That is an almost insignificant deal. I still like to look at it, but let's take a look at the charts and see what we can see on the S&P 500, because we've got the volume profile overlaid here. And if you're a bull on the equity market, well, you don't have a ton to worry about, because you see this red bar here on my charts. Now, this is going to show you where the largest number of shares have been traded based on the time period. We're looking at a 6-month chart. Now, you may not have access to my system, but there's certainly a number of charts out there where it has what's called volume profile. Pull it up, take a look at it. And what are we seeing? We talked about this last week, that the S&P 500 was going to head up and locate a new sell zone. When you're at all-time highs, you don't know where the sellers are at until you find them. And I said that somewhere we figured out it was going to run maybe around 20 to 30 points up from 420. So that puts it around 440 to 450. And lo and behold, we started running into sellers right around 440. But again, if you're bullish on the S&P 500, well, do you have a lot to worry about? No, because look at where all the volume support is at, which indicates that in the last 6 months, all the people between these two purple lines are buyers. And this is what's called support, where buyers are at. So not much panic, not much worry at this time. Now, if this zone were to break and we're not near it yet, then your next zone of support now becomes down here at 389. So it's a lot of buyers. As long as they're holding, well, not a whole lot to worry about. Let's move on to the NASDAQ 100, the Qs. No changes on the price and momentum signals on the moving averages. We see a change now where it falls below its 9-day moving average. Again, not a big deal unless that becomes a leading indicator of more to come. So at the moment, not much to worry about on the NASDAQ. Let's take a look at the charts here. Running into a sell zone, one pretty high up. You know, when I look for where zones are at, it kind of measure between where one and the other's at. So you can see there was a very thin gap between this buy zone here and the sell zone here, and a much larger move up here, suggesting that this is building out to be a sell zone. That again, if you're bullish on tech stocks, well, you've got quite a bit of buying support on the Qs between, say, 333 and 340. So not much to worry about here. In fact, if the NASDAQ, like the S&P 500, came down and tagged its 50-day moving average, well, it's just confirming the trend. So no major warning signs, at least on the broad equity markets. But wait till we get to the sectors, and now we're going to look at small caps. And this is something I really want you to understand, that small caps lead the large caps. This is something not a lot of investors understand, but small caps lead the large caps. So if you're wondering, is there danger in the small caps? Well, there's two things that can occur here. One, the small caps are going to catch up with the large caps and put up a much larger return, or they're telling the large caps that, hey, you're about to follow us a lot lower. So you have to pay attention to what's going on with small caps. We're looking at the Russell 2000 IWM price now bearish across all the moving averages, along with momentum, that is not a good sign. It's now also below all its key moving averages. This is a huge red flag to me. When I'm seeing price and momentum bearish and I see below the key moving averages, this is not good. 1 and 3 month momentum are negative and falling. And I'm going to guess that over a 6-month period, we're going to get close to seeing this turn red. Let's take a look at the charts and see what it had to say. So we're going to go down here to IWM, and this is very interesting because here's a 6-month chart. So where is our 6-month momentum trend? Well, it's down right here. So as a price kind of starts to move up here in the next couple of weeks, we should see that 6-month trend turn red unless price continues lower, and it could happen a bit sooner. What have we noticed? We have down here between these two purple lines a buy zone. How do you know it's buyers? Because price, when it gets in here, goes up. That's where buyers are at. How do you know this is a sell zone? Because when it gets in here, sellers are selling. And now what happened? We talked about last week how this was the path of least resistance, was likely lower, and it tagged the upper end of its sell zone and came screaming down and is now touching 2 days in a row the top end of its buy zone. You notice the volume support line, it's below that, suggesting that this is a topping pattern that's going on here. So if you're in the large caps, then you should be paying attention to what's going on here, the small caps, because it's telling you there's some risk here. Now let's take a look and see. I'm curious, what would Momentum Timer Pro have to say on this? Now, if you've not heard about Momentum Timer Pro or you're not signed up, I'll show you how to do that in a moment. But this right now is an open beta. It is a momentum screen report that I send out every trading day. And let's see what IWM, this is using proprietary signals that I've got built, and I'm using it to build models with. So here you see IWM is showing the minimal position on a rolling 3-month and is showing a string of selling, telling you that Momentum Timer Pro has identified that this is not a strong position to hold, or if you're holding it, you should be scaling back your position against the large caps. Now, if you're not sure how to sign up, but let me show you real quick how to do that. Again, it's totally free right now, and then when it does go paid, if you're on the beta, you'll get a discounted price. Go to MomentumTimerPro.com. Link is in the description. When you get to this page, you got to click this button. If you got a pop-up blocker, you won't get it. Put your email address in. You'll get a welcome email, which is real key to this. If you get the welcome email, then on Monday, you will get the actual report and a video of how to read the report, how to use the report, and a description of the report. So let's go on. And again, it's totally free. So you've got nothing to lose. It is complex, so you got to watch the video. There will be updated versions in the future to make it easier for you to use. But if you have pop-up blocker turned on, you won't get it, or check your spam if you're signed up and you can't find it. It's in there somewhere. We're also going to look at transportation because the transportation sector also leads the large caps lower. So let's take a look at it. And what do we see? Unchanged. Well, this is new, so it's unchanged from last week. We added this. I added it after the video. Price is bearish across the 21 and 50-day moving average. 100-day is still bullish. Momentum is now bearish across all those moving averages. It's below all key moving averages. That's a huge red flag for me. Momentum is negative and rising. That's nice, but not a major deal. It's kind of like the 9-day moving average. It's there for you to get an idea of what's going on, but not something to get terribly excited about. 3-month momentum is negative, and the rest of the momentum trends remain positive. Let's take a look at IWT and see what's going on there. And this is not a chart you should get excited about. And here's a simple reason why. It's crossed the 21-day moving average and confirming it on the way down. That is a bearish signal. It's crossed the 50-day moving average. It's rolling over and heading lower. There's your volume support line telling you that what's going on above here is sellers. So here's your second red flag. Your first one, small caps, not rallying with large caps. Second one now is transportation sector heading lower. That's not good. And now maybe another one, the energy sector looks like it's peaking. Now we have price bearish across the 21 and 50-day moving average. Momentum bearish across all three, below all key major moving averages. Momentum, you're seeing these momentum signals are coming in a little late. The moving averages give you your first signal. Generally, the momentum signals will give you your second one. So let's take a look at what's going on with XLE, and we see a similar picture here. It came up and hit this long-term resistance level where sellers are at. Let's zoom out on my chart here. I want to show you this. Here's a 10-week or a 10-year weekly, and you can see this was a buy zone where this purple line here, buyers came in, buyers came in, buyers came in. Now, why are they selling here? Because there were people that bought there and they got caught and prices went down, they lost money, and they made the decision as an investor when it got up there or anywhere near where they bought before, they would turn into sellers. So this is why support turns into resistance, because these people are getting out now. I want you to understand that. Now let's zoom in and look at a more granular view. Cross of the 21-day moving average headed lower. 50-day cross that, and it's starting to curl and head lower. Cross the 100-day, and here's your volume support line that we talked about. It needed to hold, and it didn't. So what is that now telling you on XLE? That everything here, 52 to 56, is sellers. It's crashing through this line of support right in here at 49, suggesting that I would guess early in the week there's going to find some buyers into here. If this doesn't hold, XLE has now got its sights set on 44. So don't be surprised if we find some buyers here at 49, maybe a retest of this volume support line, and then maybe all bets are off for XLE. Let's go on to the next one. So there's another red flag. How about the financial sector? Well, it's got another red flag coming here. 21-day, 50-day bearish price and momentum. Only bullish on the 100-day. Now below the 9, 21, and 50. There's red flags, 21 and 50. My two key moving averages that I look at. Momentums haven't triggered yet. 1 month negative and rising. Good sign. But let's take a look at the financials here and see what's going on. Now, I want you to keep in mind the banks recently announced an increase in dividend and share buybacks, and people said that's really great. And not necessarily, it doesn't always work out that way. Here you have the 21-day moving average is now back below the 21-day. So it crossed that, and it's trying to confirm on the bottom side, following the moving average down. It crossed the 50-day, and it still hasn't flipped really lower yet. It's starting to, but here's your volume support line, suggesting despite the banks selling, or the banks buying, actually the shares back, let me rephrase, that everyone else is selling into that buying stream, which sort of makes sense. So for the financial stocks, you're starting to see a peak here. Obviously, we're identifying sellers up here, and buyers are a little bit below here in that $34 to $35 price range. So again, another sign of stress in the markets. How about industrials? A 21-day flip bullish on price, but traded back with the 50-day now bearish on price, unchanged on momentum, below the key moving averages through 9, 21, and 50, but staying above the 100. So some possible risk in industrials. Let's take a quick look at what's going on with XLI. And there you go. There's that volume support line. It's trying to confirm against, telling you that what's gone up above here, there's your sell zone. So you could draw your lines in here and identify where the sellers are at. Let's move on to the utility sector. No change in price or momentum. Now we got clean signals across the 9 through 100-day moving averages. 1 and 3 month moving averages are rising, perhaps as a sign investors are looking to utilities as a sign of safety. But remember, utilities are not always, go back to the great financial crisis. You'll see they're not that much of a safety zone. And what do you see? Came down, found support, held support, prices rocket up. You can't really see this volume support line is hiding right on that purple line, and it's back up here. So a bit of a bullish move, and let's zoom out into this bigger trend, and you can see sellers are clearly, if I were to draw some more lines, located up here. So perhaps a bit of a flight to safety for utilities, but again, during liquidity events, they are not safe. You can see that volume support line now, and the 1-year chart gets moved down, and that's where you're still seeing some buyers at. So still buyers in utilities. Let's go on to, what do we have next? Large gold miners. All right, so this is interesting for sure, because a lot of people are bullish on the miners due to inflation. They really just don't understand the Fed policies. Be sure to tune in the macro show on Monday. We're really going to dig into money markets and how the Fed is actually perhaps tightening monetary policy. Investors don't realize it. Price remains bearish on the 21, 50-day moving averages, bullish on the 100, momentum bearish across all of them. below key moving averages through 100-day moving average. Unchanged on the momentum screens. 9-month flip to negative and rising. 3 and 12-month are negative and falling. Not a pretty picture there. Let's look at GDX, see what's going on, and see if there's any hope for the miners. And yeah, this is not a pretty situation. You see, broke the 21-day moving average, came down, found support right where we said it should at what level is this? There it is, 33.48. And it tried to break over its volume profile line on the 6-month period. Couldn't do it, confirming yes, indeed, sellers are above here. Again, the path of least resistance for GDX is down here, this 31 price level. As you zoom out over a 1 year, and you see the same volume support line, telling you we're in a major topping pattern for the miners. And miners, again, another story is you see when liquidity starts to get drained, the miners are the first to get affected on the way out, first to benefit on the way in. And if that's not convincing, we don't look at this during this show, but we'll flip over to GDXJ real quick, pull out to a 2-year chart. You can draw a line right in here. There's your support. There's your topping pattern. And the next destination for GDXJ is in the 37.38 price range based on what we're seeing in the charts there. How about we go on to EEM, danger zone here, emerging markets, very similar to the gold miners, also a leader of liquidity, one of the first to see a drain, also one of the first to benefit. So if you see a top in EEM, well, that's a warning sign. So we're stacking up, the cards. There's a lot more that are saying danger below for the broad equity market, bearish across all price and momentum, unchanged though, below all key moving averages, 3 and 6 month negative and falling. That, when you see the 3 and 6, those are two key to me. I mean, if I see these paired together, then the rest of the domino is likely to fall. Let's take a look at EEM and see what it has to say. And yeah, this is not a pretty story. We'll zoom out to the 1-year chart so you can see this beautiful topping pattern. It's going sideways very clearly above this volume support line at 54. It's telling you there's sellers up here. We'll zoom in a little bit on the 6-month, telling you again there's sellers there. And this tells you that the next direction for prices, there's not a lot of support. The next support for EEM is in the high 50s. And then you're looking realistically down into the 40s. Once this breaks, mining stocks in the broad equity market are going with it. Let's move over into the bond market. High yield bonds keep chugging higher as investors are paying ultra low rates for really risky bonds. Price momentum unchanged for the week, now dipping below its 21-day moving average, perhaps a leading indicator. Well, let's see. That's one thing I'm looking at is when it crosses the 21-day. But you'll notice that it has a lot of those crosses up here in the high yield space. So nothing really to be concerned about yet. You're seeing a lot of volume support at 87. So you're seeing buyers are just overpaying for risk. There's just not enough yield for all this risk, because if this were to fall apart, high yields hit 84, and then you're down here in the 82s, and then liquidity problems get dangerous as fears of defaults occur. But in the meantime, investors paying big for that little extra interest without any concept of how much risk they're really holding. How about Treasury bonds? We're going to look at Momentum Time Pro because, again, this thing nailed the rally in TLT. Price bullish across the board. Momentum it's only bearish on the 100-day across above all the major moving averages. About 1 and 3 month momentum positive. 6 month coming before you know it. 6 and 9 negative and rising. 12 month negative and falling, but that too will change. Real curious here. Let's see what Momentum Timer Pro is called on this, because it really nailed it. Let's go down here. So TLT has 37 consecutive buy signals on a rolling 3-month period. It's recommending a mid-sized position. This soon will flip to a maximum. It's nailed the run. And now let's go back and take a look at those charts and see what's going on with TLT. Another sign, of course, you want to add signs. Another sign of risk-off event. Here it is, TLT, just a stone's throw away from its 6-month momentum making that turn green. Up here you see it's just chugging through across the 21-day, and it's confirming the 21-day higher. Across the 50-day is moving higher. There's that, remember that volume support that everybody said was sellers. I said, no, this is a bottom. This is what bottoms look like if we're buyers step in. There's your major volume support on the 6-month period. Again, another sign of risk off as bond prices head higher and yields head lower. Momentum Timer Pro, of course, nailing that call. You'll be surprised how good it is. Check it out. Get signed up. Follow along. Gold, again, it's free, so don't have much to lose. Gold futures, at least it's free for now, so not much to lose. Gold futures should be telling us what GDX is, and there's problems. No change in price and momentum. It is above the 921 and 100-day moving average, but below the 50. So there's really a mixed bag. You look at price and momentum, no clear direction. You look at the moving average, no clear direction. You look at the momentum trend, and then a bias toward the downside, but the 1, 6, and 9 are negative and rising. What is going on with gold? Well, let's go take a look here. Gold futures raced above its volume support line. Remember, this was selling. A lot of selling going on up here. It got into this zone here between 1800 and 1820. I was thinking that this is, the sellers were going to hold here. There was just a surge of buying, reversed by a surge of selling. So again, nothing clear here in gold other than if you're looking at the miners. Remember, the miners lead the metal. So the miners are telling you that the metal likely headed lower. Maybe silver gives us a better story. Let's take a look at silver. And we have bearish across price and momentum unchanged from last week, below all the key moving averages. That's dangerous. The only good thing for silver is the 3 through 12 month momentums are positive and rising, giving us a little bit of hope if you're bullish on silver. But let's take a look at this chart. It's not pretty. Last 12 months, it's just almost in the last 12 months, completely range bound. Here's your volume support line at 26, telling you above that is sellers, below that is buyers. The path of least resistance now for silver is back down to the bottom of this buy zone at 25, maybe into the mid 24s. So you can see it's happening. And that is not a good sign for gold if silver breaks down. And last but not least is the dollar. Another sign of markets topping. Got to take a look at the dollar. It is price bullish, momentum bullish above all key moving averages. Remember, this was red, and everyone said dollar's dead. And I said, look, when this thing is all red, you need to be looking at an entry point to buy. Momentum Timer Pro, yeah, you nailed that call too. I'll show you that as well. And, if you're a day trader, this is not the right report for you. But if you're, an intermediate long-term investor, this is great. Look at that, 24 consecutive buy signals. There's 21 days, trading days in a month. So you had a full month of knowledge that Momentum Timer Pro was calling consecutive buy signals. Look for this position size on a rolling 3-month to turn into a hold, which is an early buy signal. And remember, back on the bonds, 37 days. That's like 6 weeks of consecutive signal, more than 6 weeks of consecutive signals. I think 7 now. So Momentum Timer Pro doing a phenomenal job, just as I and the other members of the beta team, which you can be a part of, have worked on and built. Here's the dollar DXY. Dollar Print says this is a key thing to watch, and we've watched this downward trend line. It's starting to break above that, telling us the next direction for the dollar is up here at 94. Let's go take a look at UUP where we get the volume support. Boom, there it is, right at 94. There's your bottom. One bottom, double bottom. Buyers clearly down here. Break this volume support line, and we have to zoom out to see where you break this volume support line, and it's going to be a relatively quick move up into, you see where these triple bottoms are. Let's go and look at DXY to see what the price level is. You're talking a fairly quick move up into this $96 range. Massive, massive risk off signal coming in the dollar. Anyways, thanks for being fans. Thanks for watching. We'll see you on Monday for the macro show. The content of this video is provided as educational information only. It's not intended to provide investment advice. Just is not to be construed as a recommendation or solicitation by or selling security, financial instrument, or to participate in any particular trading strategies. Video was prepared by Steven Van Metre, person and passive opinions expressed in the video that do not reflect the view of Atlas Financial Advising or Steven Van Metre Financial.